Stocks are higher here this morning. Taking a look at NASDAQ's price action on the 4-hour chart. So you've got NAS holding support here for now. I did get stopped out of my NAS position, but I do have a small position in the semiconductors ETF. Well, actually, it's not a small position. I have a pretty good sized position in the semiconductors world, which, means that even though I'm not in the NAS trade, I got trailed out of that one. The semis trade is doing quite well here this morning. So we'll see how that one can play out. Speaking of, indices here for a second, we got the S&P 500 testing back towards its all-time highs. And, I think that there's a lot of uncertainty. I mentioned it with the, a lot of uncertainty with the election, right? But when you look at the stock market, if you want to know what would make the stock market rally the most, right? Is it going to be Trump? Is it going to be Harris? Well, here's the take that I have on it. What's going to make the market probably rally the most would be if the executive branch and the legislative branch have split power. If one is red, one is blue, one is blue, one is red, the market will like that. Why? Because the market doesn't love a bunch of change and passing of a million laws to change all the landscape. They don't really want that in either direction. As a collective, Wall Street kind of just wants things to just keep going and keep doing their thing. We don't want a bunch of regulation. We don't want a bunch of taxes, tariffs, all that stuff. The more, and I'm not saying that about Trump or Harris, like both of them are going to initiate as much change as they want to do. Wall Street actually wants minimum change, regardless of which one you like. It's about Wall Street just wants things to chug along and make money, and big changes create uncertainty for the picture. It doesn't matter which candidate you're talking about. So what does Wall Street want to see? Wall Street wants to see a split Congress and presidency. So that would actually be, in my view, one of the most bullish cases for the stock market. So we'll see if we get that. But if we don't, the market will do its thing. It will be very volatile in the coming weeks with the presidency stuff. But I kind of go back to what I said in my live stream yesterday. I don't think that the presidency is as important as people really think it is for financial markets. It is important, don't get me wrong, but at the end of the day, the Fed, the economy, those things, they're their own living, breathing, animals. At the end of the day, those things matter far more. Is the, secular AI trend going to perpetuate into 2025 and 2026 and carry new, efficiencies into businesses? Those are things that are making markets go up. That's the question, right? Not whether or not it's Trump or Harris. Anyways, let's see what else we can get into. So the dollar index is, it's been going up here quite a bit recently. I wouldn't be surprised if you get some sort of pullback. We got retail sales coming out in just a few minutes, so we'll take a look at that. We got unemployment claims, see what that's going to do. In fact, let's switch over just so we're primed and ready for this. Again, what we've got here, it's not that boring of a metal, Nick, talking about gold. In terms of like financial symbols, instruments, things that move, gold usually moves very little. I know people think it moves a lot because when you're trading it on leverage on a CFD broker, it seems like it moves a ton. But in actual percentages, usually gold doesn't move that much compared to things like the NASDAQ or, small cap stocks or tech stocks or silver even moves more than gold. Like gold is almost like a step up from currencies. I mean, it does move a lot more in currencies on a percentage basis, but it moves a lot less than a lot of other things. But it depends who you ask. I don't think gold is boring. I just am pointing out that in terms of a movement-wise, it doesn't move that much. It does this year. This year is a bad example for me to say that. Up 30% is a massive move, but that is a very atypical year for gold. Got about a minute and a half here, guys, before we take a look at the retail sales numbers out of the United States, as well as the unemployment claims. Which one am I looking at closer? Honestly, I would say I care about equally to both of these. Unemployment claims is important to see where the labor market is at, but retail sales are still very important as well. We'll see. Sometimes you're going to get a big spike out of these events. Sometimes you're going to get nothing. It just depends what the data tells us. What we'll do here in 1 minute as we get the numbers is I'll do my best to guide you through my thought process on how this actually impacts the fundamental story for the dollar, for gold, for stocks, etc. And I'll do my best just to kind of break that down as easily as I can. We got about 45 seconds here before those numbers come out. Just so you know what you're looking at here on the screen, you've got the stock market stuff here. So this is the Russell, the NASDAQ, the S&P, and the Dow Jones. You've got gold right here, the dollar right here, silver's right here, and oil is right here. So all of your different charts, if you want to just keep an eye on it to see what the reaction is across all of them, might be easiest. And we can go ahead and roll our breaking news. All right, so we got about 10, 15 seconds here before the number comes out. We'll see what it does. Again, don't leave after the spike. We'll discuss if there is a spike. We'll discuss what it means for markets and why. Here we go. All right, retail sales, unemployment claims coming out. Okay. Nothing too big of a reaction just yet. All right, we got core retail sales higher than expected. Unemployment claims came in exactly as expected, 241K. So no big surprises on that front. Retail sales being strong is arguably a good thing for the stock market, not as good for gold because, of course, that shows consumer strength and a stronger economy, generally not particularly bullish for gold. Dollar index is up here. Let's double check to see any more numbers for those retail sales numbers coming out to. There it is, 0.4. So we had a strong retail sales numbers report. Unemployment claims came in line with expectations. I would say that this is a good report. Kind of supports the recent bump in stocks here. And gold down a little bit off that makes good sense. Dollar index continuing to push along here. Strength for the USD. You got Dow Jones up, Russell's up a little bit off that. NAS and S&P also seeing just modest moves higher off of that. Silver, gold down here off of the number. And let's break that down for a second. Why would this be positive for stocks? Well, think about it. Retail sales reports the consumer activity. Are people out there spending money or are they not spending money? And what we got from this report is that people were out there spending money, and spending money shows that there's an appetite for it. And when there's appetite for that, what can businesses do? Well, businesses can make more money. If businesses are having more customer demand, more people stepping up to buy things, they're coming back and buying things again a little bit more aggressively. Prices are high, don't get me wrong, but they're not rising nearly as fast as they were a year or two ago, right? Inflation is not, prices. There's a difference. I discussed this yesterday. Prices are still going up, but instead of rapidly going up, now prices are going up still slowly. And people get all up in arms. This always drives me crazy. People are like, yeah, but when are they going to come down? When are prices going to come down? The only time prices go down in US history, almost always, is because there's a massive recession and a bunch of people lose their jobs. That's when prices go down. So I don't want that. What we really want is we just want wages to go up and prices to go up at a very okay pace, right? It's okay if prices go up. We just don't want them to skyrocket higher because that, can lead to really bad recessions. So inflation is still a thing, but it's nowhere near as hot as it was a couple years back. This Edge Finder thing is pretty cool. I can trade it all sorts of different ways, and for me, I like using fundamental analysis and macroeconomic data to try and make better decisions. What do you like to use it for?
I'm more of a proponent for the COT data or the business forecast tool.
Did your tooth just fall out?
It was my baby tooth. It'll come back. Hey, at least I don't burst into flames when I step out into the sun.
Trading without the Edge Finder can be scary. The Edge Finder keeps you up to date with all the most important market-moving information. Check out the latest COT data, retail sentiment, fundamental data, and so much more. You can get the Edge Finder for yourself with the link down below, or click the link being dropped in the chat to speak now with one of our team monsters.
Miko, are you looking for any bearish side on the dollar, or are you looking to switch into bull camp?
Yeah, I've been looking to buy Euro USD and take Euro USD higher. I actually got some longs here, but didn't work out too well. But yeah, we've had a lot of momentum, and it's broken through the areas which I wanted to buy from. So in terms of my personal trading, I'm gonna sit on the sidelines for now and look to actively buy. My last area was here, which price has broken through. In terms of the dollar, we are seeing a really big push, and I'm looking at some areas around 104, 250, and possibly back at the high over here as well for some turning points. But in the meantime, dollar is definitely very, very strong, and we've just been grinding higher. So I wouldn't anticipate dollar reversing, because I think that's pretty big call to kind of anticipate that stopping on a dime and turning around. But as we start to approach some of these areas, I think we can go through at least some retracement, because this has been such a strong move. So I would naturally expect the market to go for a bit of a breather at some point, and up at that high there as well. Of course, very pivotal area around 106. So in my book, it looks like dollar's still got a bit more room to the upside. So you might see euro fall a little bit further. Pound USD looks like it's trying to break through some support here as well. So if that does, I'll be expecting more downside there as well. New Zealand dollar already broken through some key support there as well. So it looks like in my book, USD strength might have a bit more room to move into.
Okay, fair enough. Same question to you, Marco. Dollar index or just any currency, like maybe euro dollar. Are you looking for dollar strength to continue, or is it looking stretch? What are your thoughts?
Well, for the euro and the US dollar, I was looking for a brief buy setup for maybe a bit of a correction of the overall downtrend. Right here, I saw just a little bit of momentum pushing up, so I was looking for the next candle to potentially print the bullish, and then I would be looking for buy setups. After the retail sales came out, my whole idea is now basically gone. I'm going to reevaluate the situation. It's a pretty big bearish candle. It's probably going to close bearish as well. So I just see a lot more downside on the euro and the US dollar. The fundamentals are behind it as well. I had the same thing going on with the pound. I saw a little bit of a relief right here, and I was looking for a buy setup. It's looking also a pretty descending channel, which in my book is a bullish pattern. But again, with this retail sales number, it's looking a bit better on the pound, I have to say. If it can close like this, maybe leave a huge wick to the downside and continue pushing up, I would be a buyer in this market. So the euro and the US dollar definitely looks more bearish than the pound. So I'm going to be looking for sell setups on EU. AU is kind of in a bit of a no man's land, but GU possibly still looking for buy setups, still looking for that correction to the upside. And we will see what will happen. Again, all of the dollar pairs are fundamentally pretty bearish, right?
Yeah. No, that's for now. That seems to be, the case. But it's one of those things. Miko was pointing out that with the dollar index, even though fundamentally, I think that it does have some good grounds that it's standing on. You had some good labor data. You had retail sales today. You've had, unemployment claims staying pretty solid. JOLTS job openings holding up. There's been a lot of things that have been positive for the dollar. That being said, though, there is a balance between technicals and fundamentals, even in my own analysis. Even though I personally prefer, studying the macro a lot, I do also recognize that, as Miko's pointing out, you've had this really good run on the dollar index. It could take a break here at these resistance levels, that 104 level, which actually, if we look back on the chart, that was a pretty huge level for sellers when they took it over. I remember this time very well. 104, I kept saying that on my channel over and over. We're going to break 104. We finally broke it, and it just went flushing lower here to the downside. So I can imagine that there may be some PTSD for bulls here, where once we get up into this range, it's possible you could start to see a little bit of profit taking / perhaps sellers coming in. So even though fundamentally I think that the dollar may have some room to continue, there very well may be some, corrective pullbacks here within that trend. And who knows, it's one of those things. We've got the elections around the corner. There's big uncertainties there. New trends could develop, new things could change. But I do think that a small part of why the dollar index may be rising is partially the elections, simply because both candidates have a track record of spending a lot of money. a lot of money spending from the government typically means the Fed has to keep rates higher. Keeping rates higher means to stop inflation, which is, again, dollar bullish. So I think that might be a small part of this. Perhaps we'll see a corrective move after the election, after some of that uncertainty is out of the way. But I guess we'll just have to see. But really interesting stuff here happen on that side. What about the indices? I'm curious, Mika, are you S&P, NASDAQ? They've pushed on. There's been a lot of markets. Sometimes we get into these calls and it's like everything is extended. Everything is far one way. Feels like that right now, whether it be, Bitcoin, indices, gold is at an all-time high. We have this conversation, and I know sometimes there's people who have heard this before, but I want to ask your thoughts on the indices, but also how do you deal with markets that are extended? What do you do when you're looking for setups as a trader when everything is, already making big moves?
Yeah, I mean that's exactly what we're doing with the indices. S&P looks like it's just breaking the highs at the moment. US 30 looks like that's doing the exact same. NAS hasn't done that quite yet, so I really like NAS because I expect it to do what US 30 and the S&P are doing. So there's a bit more upside, a bit more room for us to move into until we come back into major resistance. But yeah, they are very, very bullish. And again, in these kind of conditions, we're not really seeing big pullbacks. If you drop to the 4 hour, the hourly, you get some nice pullbacks there. But in terms of higher than that, they're very, very minimal. So I think in terms of extended markets, the best way to look at them is they're bullish until they're not, or bearish until they're not. And if they remain in these conditions, who knows, they could really, really fly, and you can catch some really big winners in these conditions. And you can keep the risk small as well. So in terms of risk reward, they're very favorable opportunities. So with markets like US 30, when they're pushing like this and S&P pushing like this, I don't trade them, but if I was trading them and if I was trading intraday, I'll be looking at the 4 hour and the hourly to try and look to buy those pullbacks at areas of support and resistance, and I'll try and just see how far I can take them, because in these conditions, you just don't know where that top is, and you could really catch some big winners. I really like NAS as well because, like I said, it's still got room to that high, so that to me looks like a nice target to have, and maybe we go beyond that as well. But yeah, they're just very, very bullish. I know they're extended, so it might feel a bit awkward to buy them, but the chances are they're probably going to keep pushing higher rather than suddenly just drop on themselves. So I would always expect more upside until proven otherwise.
Fair enough. Yeah, no, I think that's smart. And we've talked about this, at least 50 times this year. But with gold too, when you have these markets that are just trending, it can be very easy to start convincing yourself this can't keep going on. It's gotta reverse, and it will. But if you hold your breath, you'll run out of air. These things are just going and going, and nobody's able to stop them. They will stop at some point, but we peasants don't know when that's going to stop, right? We could just ride trends. That's all we can do, and look for calculated reversals. If you're going to do a reversal setup on something like gold or the indices, totally fine, but just wait till you have proper confirmations, price action is agreeing with you, etc. That would be my opinion on it too. Marco, what about yourself? Indices / how do you deal with extended markets?
Sure, but before that, I wanted to come back to the elections. So the last election was 4 years ago. I think it was November 2020. And did you find a specific trading edge after the election? Did you execute some interesting trades? How is your plan for that?
Yeah, so during the elections of 2020, that was a very interesting time. The market was just pumped up on just stimulus and so much, like social media was going crazy during that time. If you guys probably remember, it was just the pinnacle of social media, controversies, debates, and fighting. And, because whether you like Donald Trump or not, it's pretty obvious that he brings some serious controversy to the room. And, so there was that going on. And I think that during that time, there was just massive amounts of spending going on into the election, which I don't fault Trump or Harris for spending a lot of money into an election. I'm going to be honest, if I was trying to run for president, I would spend as much as I possibly could to make people as happy as possible. That's what humans would do to get votes. So there was a lot of that. So the markets were just pumping into the election, and then they just continued after. I mean, it's, people love to debate, oh, stock market did really well under Trump. Well, it also did really well under Biden. It went well under both presidencies. Both had really good, standing stock market performance during their time. It's actually probably pretty close in terms of gains between the two of them during their terms. I think that money printing, what Wall Street likes to see is a ton of money getting printed and spent into innovation and building stuff, and they like low taxes. So if you had to ask me who's going to create a bigger bump in the stock market in the short term, probably Trump. But is it going to last and be the longer term, better for the stock market? I would say both of them are going to probably have good stock markets, as long as something catastrophic doesn't change. I don't actually think that the president really makes the difference in terms of whether the stock market itself goes up or down. I think that it's about the Fed, it's about the economy, it's about, trends in corporate America. I've talked about that a lot, like the AI theme, like, does that persist? Those are bigger questions to whether or not the stock market keeps going up than whether it's Trump or Harris, in my opinion. So it is worth discussing, but it's not worth, fixating your whole life on. And you have people who are just, I've had my comment section been really interesting. You guys would find it hilarious. You might have gotten these ones too, but I've had, just because I talk fundamentals so much and I've been having to discuss the election a little bit, you get people on both sides who are like, if Trump is elected, if Harris is elected, we're going to enter this horrible end of the world event. And I just don't think that in terms of markets, it is as important as people, make it out to be. It is important, don't get me wrong, but so is the Fed, so is the economy, so is all that other stuff. So it was an interesting time. Markets were just pumping in 2021. They've continued to do very well, but we'll see. I mean, it's one of those things that also just has to do with so many other variables all at one time.
So I've still got this position on the S&P. I've been holding this since, when was this date? It's the 9th. So almost 10 days, actually. It's crazy. But yeah, so far so good. So the indices are on a rocket ship to the upside. Actually, if we look on the Edge Finder here, we can see we've got the Dow, we've got the DAX, NASDAQ, the S&P, the FTSE, and the Nikkei, all reading as bullish. It seems to be the season for the indices at the moment. Now, I'm not sure how much you guys know about seasonal trading, but there's the sort of common idea that sort of in December we start to see the stock markets rally, obviously higher spending by customers. I'm not saying that's a buy signal, and it definitely doesn't always happen, but it's something to keep in mind as we head into the end of the year. I actually did take a position on the dollar yen as well this morning. Currently testing the waters, got very low risk on this one. Stop is just below the previous week's low. Looking for a full correction, actually, as we saw today's data come out for the dollar. So we can see got a really nice jigsaw piece or jigsaw puzzle going on here. You can see how it's marked up. Every move here has an explanation. And then today, a really nice confirmation for the dollar to continue moving higher was the core retail sales, jobless claims, retail sales, and the Fed manufacturing index. Very, very strong data for the US dollar. And if we then go and take a look at the yen, we are continuing this trickle to the downside. We've broken below this previous low that was acting as support for a while. So I'm now really looking for a continuation to the downside and a potential correction of this whole move that we saw when we saw the unwinding of carry trades and that sort of flash crash, if you're willing to call it that. So yeah, that's the plan on the dollar yen. Essentially just going to sit and hold this one. If we do end up coming lower and I'm getting stopped out, it's fine, low risk, no problem. If we come up, then I'll look to scale in and round off my risk at 1%. New Zealand dollar against the US dollar, still sat in this. It's done absolutely nothing since I entered. It's just been range bound, so there's not much to talk about in that one. My dollar NOK trade, this one's been a little bit frustrating to sit in. So if we look, I entered this one last week and the weekly candle closed really, really nicely, wicked to the upside, respected this trend line, and looked like it was about to form this lower high. However, obviously the dollar is performing very well, so this trade isn't doing too hot. But the positive side is I was entering this position fully understanding the situation that the dollar's in, so I took very low risk. You can see here there's two positions at 0.3% each, so no issues there. And the NOK is still forecasted to gain significant strength as we head into 2025. So happy to hold this one out. And, again, if it's stopped, it's stopped. The Australian dollar Swiss is one I'm also sat in. So this was a signal to the Discord. It's currently just hovering just below entry, so drawdown at the moment. This one again is more looking towards a risk-on market as we're seeing the Australian dollar hold its ground and the sort of outflow from some of the safe havens like the Swiss as we're seeing the dollar start to do a little bit better. So we'll see how this one develops. On the watch list, we've got quite a few things. I think the Euro USD is, it's a highlight for a lot of people at the moment. I'm seeing some chart requests. I'll go over some of your charts after I go over the watch list. Did you shave? I did shave. Yeah, so as I said, I had to go out yesterday, but I was really ill the previous 2 days, so I didn't have time to go to the barbers, so I needed to look presentable very quickly. So the way to do that was just shave off the beard. But yeah, anyway, so the Euro USD is melting. Actually, let's see how far has it dropped so far. It's dropped 3.5% with almost no pullbacks. We've had one positive day, and that's about it. And the rest of it is really just wicks. We're seeing no entry points here for swing trades. If you're sort of scalping this or day trading this, I'm sure you could get some good entries, but yeah, for swing trades it's very difficult to get into, really. I was hoping, well, I probably shouldn't say hoping, but I was looking for this pullback here off this level of support and this 200 moving average, just some sort of relief to then present an entry point. But unfortunately, that's not happened. It's just continued this melt to the downside. So we're still looking for some sort of pullback here, whether it's just a retest of this previous support and then test it as resistance, classic break and retest, along with this 200 moving average. That would be an ideal trade, really. But, what can you do? We can't do anything but sit and watch at the moment. So very boring on that front. The dollar CAD, again, pretty boring. Was looking for this pullback here. We had 2 bearish days, and I was like, oh, maybe this is the time when we're finally going to see some sort of pullback in this market. And today it's just proven me wrong. That's not happening clearly. So I'm thinking about scrapping this trade now, to be honest. But we'll see. The DAX, now the DAX is quite interesting. I tweeted about the DAX. I think it might have been yesterday, actually. So I was looking for this pullback here. So I was looking for price to retrace back into this trend line, retest this minor level of structure, come and close the gap that we've got between the 200 moving average. And we didn't get that. So this entry here was fine. We did have this break and retest, but for me, it's still just a little bit too high. I don't like entering on positions like that. I needed a deeper pullback, which for now we just don't have. So maybe if we come down again for this trend line, I'll look to enter. But yeah, again, as I was saying, we do have the DAX score is 9, so it's just behind the Dow as the most bullish. The Euro Pound, again, very, very good trade here. However, the problem is it's been very difficult to really get in. So I was short on the Euro Pound some point around here. And then as soon as I entered, we got the news that the Bank of England was going to start cutting rates, which of course weakened the pound and strengthened the Euro Pound overall. So I stopped out there. And since then, it's been very difficult to really get an entry because it's been choppy, but it's been choppy to the downside. It's not been a smooth run. So I'm still looking for possibly even just a day trade. The main level I'm watching here is this level of support through here at the 0.82. So yeah, we'll see if we can get some sort of pullback, even if it's, again, just a break and a retest. We might be able to get, what would this be? Let's see. If we took it to here, yeah, maybe a 1 to 1.5, maybe a 1 to 2, depending on where the stop is. So yeah, not too bad, but not ideal. Copper as well is looking very good. So the situation we've got with copper is the technicals look beautiful. So someone in my Discord this morning was pointing out copper and said, "Oh, I'm looking to enter copper. It follows the strategy, which is the sort of trend. We've got the 200 moving average that's pulling into price here. We've got the fib and previous structure. The problem is the macros for copper just do not seem promising at all. So let me just pull up the info here. So here, this is a good tip for any of you guys that want to have very quick outlooks on things. Go to Trading Economics. You can go into currencies, commodities, stocks, whatever. Click on what you're interested in, and you can get a very brief breakdown here on what's going on, why is price moving the way it's moving, and that can help give you some clarity in the markets. And it's completely free. So it's 100% free website. Copper futures slipped below list. I'm not going to read all that because I'm lazy, but essentially it's just because of China and also the Fed rate cuts. So what's going on is the Chinese stimulus has faded, thus resulting in lower production in China, again, in turn lowering the demand for copper. So we are seeing copper decline. It wouldn't surprise me if we see copper continue this move to the downside. So it's not the best trade really, although again the technicals look good. The drivers for this market just aren't there really.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.